Thank you for joining us for another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum where all voices matter. Well, the federal budget has been presented, we're still in lockdown, and the Canadian economy may or may not be in trouble. Let's go to our monthly panel to read the tea leaves. Joe Oliver was Canada's finance minister under former Prime Minister Stephen Harper. Sandra Pupatello was Ontario's trade minister under Premier Dalton McGuinty. And Gary Marr had a successful career as an Alberta cabinet minister and now is head of the Canada West Foundation. Welcome to you all.
Thank you.
Good to be here.
We're going to start with just one question. Would love to get feedback. The last time we had the panel, it was just before the federal budget, and now, of course, that has come and gone. It's been presented to Parliament, and they'll be starting the implementation acts. So maybe start with the former finance minister, Joe Oliver. What are your thoughts on the federal budget and its economic impact?
Well, Tony, you and I had an in-depth discussion on that, and let me just say that the public reaction to the budget was not stirringly positive. Now, I didn't spend a great deal of time reading every article in the Toronto Star, so there is another side to this. But the budget, I think, was viewed as pretty profligate. I mean, we're talking about $500 billion in deficits last year and this year, the debt going up to $1.2 trillion, and interest rates, $21 billion a year going up to almost $40 billion in 4 years, and absolutely no sign of an intent even of balancing the budget. I think what's interesting is among those who were sort of critical of it, was Mark Carney, who in a very diplomatic Bank of Canada sort of way expressed his concern about the excess spending and the $101 billion stimulus add-on over the next 3 years, even though the economy is really rebounding quite robustly. Mm-hmm. So, just as a sort of a political aside, is this signaling a rift between Mark Carney on the one hand and Chrystia Freeland, the Minister of Finance, and the Deputy Minister of Finance as well? Is there going to be a battle royal for the soul of the Liberal Party, where the stakes could not be any higher?
Mm-hmm.
Interesting.
Just as a little plug for a show that'll be on later in the week on Boom and Bust, I'll be interviewing Steve Pallose, former governor of the Bank of Canada. So it'll be interesting to see what he has to say on these things as well. Gary Marr, what's your take in Calgary? What was the reaction to the budget?
Well, first of all, it was very long. It was 724 pages. I probably didn't go through it in the kind of detail that Joe Oliver did, nor would I be competent to be able to draw from it some of his observations. But, when you talk about some of the criticism that, Mark Carney, in his diplomatic way, leveled against it, it's not just him. It's if you look at the parliamentary budget officer, he would tell you that a lot of the money was really not about stimulus. It's certainly not as much as proclaimed by the finance minister, Chrystia Freeland. I guess if I were to summarize it, I'd say, yes, it was a stimulus budget, but it was a stimulus for voters, not for the economy. This is pre-election spending that will be financed by big deficits. And, when Joe talked about the, more than $1 trillion that will be our debt, when this is all done, just to put that in context, it's about $30,000 for every man, woman, and child that lives in Canada. That is a lot of money, and so I think that it's a budget that is less about stimulating the economy and more about some changes that the federal government wants to make with respect to social infrastructure. So, for example, there's a bit of a trap that they're laying with respect to child daycare. They want the provinces to go 50-50 on the spending on this. Mm-hmm. I guess I'd want to remind Canadians that, when Medicare came in 1977. That was also supposed to be a 50-50 spending arrangement. Now today, it's about 85% is funded by the provinces, only 15 by the federal government. So I think that provinces will probably be looking at the gift horse in the mouth and wondering if this is something that is actually good or bad.
Sure. Welcome back to Boom and Bust. I'm your host, Tony Clement, as always, here at the News Forum. We've got our monthly panel, and we heard from both Joe Oliver and Gary Marr before the break on their assessment of the federal budget. Sandra Pupatello, it's now your turn. Can you discuss from your perspective what you liked or didn't like about the federal budget?
Well, no surprise from my colleagues. They're being as feisty as ever, about a Liberal budget being tabled. This was definitely a budget for Main Street and not necessarily Bay Street. But I also believe that if there was ever a time for Main Street, it's now. We're in the throes of getting over a third wave. Some provinces still buckling, frankly. And I do believe that this budget restores some confidence in the consumer to say, you know what, it looks like the government's got my back. The announcement of the extension of programs, whether it's wage subsidy for the employers to bring back or hang on to their people, or even the benefits for people who have to stay home. So I liked seeing that. The focus on daycare, I appreciate everybody's comments, but frankly, half the population of the country appreciates this part of the budget. And I do think that all of the naysayers, they always had the same caveat. They said, if the economy remains as strong as this quarter seems to be, then maybe they need to roll back some of that support. But all of us on the screen today, 6.5% is nothing we've ever seen in our lifetime in terms of growth for our country. And I've watched this number for a long time. It is enormous for Canada. Right. So I'm delighted to see that. But it also tells me that we're still looking at what they call that K recovery. It looks like that, in fact, is what it is. There's still a lot of parts of our economy hurting. And I think that came through loud and clear that the government is intent on helping those people.
Sandra, let's stick with you. You referenced the first quarter results for 2021 in Canada showed the economy growing by an amazing 6.5%. So you take that as a sign that the economic trends are positive in at least some areas. Is that right?
And we can tell in our own hometowns, whether you're in Windsor or whether you're out west in Calgary, the neighborhoods. There are some restaurants that are just dying on the vine right now. That service industry in general, they're going to need to see airlines back in business, the tourism sector starting to pick up again, that you can actually make bookings without fear of being shut down again, as has happened out west and up north and cottage country. So it's very much an economy where thankfully, industries like manufacturing have managed to keep moving. And in fact, car sales are unbelievably good considering we're still in a pandemic. So I believe the government recognizes that there really are two tales here. One where they've become very creative and just kept on going, and they've been allowed to. And then the other where, because of the nature of the business, they've simply had to shut down and are really finding trouble trying to reopen. And those, frankly, are the people I think we really have to worry about.
Gary Marr, this first quarter 6.5% growth rate. I'm sorry, I haven't got it broken down province by province, but what do you see as the economic trends moving forward?
I think it may be sustain this kind of a growth rate. I agree with Sandra when she talks about this recovery as being K-shaped. There's certainly a lot of people, in the services business that are having a difficult time. There's challenges throughout Western Canada and some of these areas. I would take some comfort in knowing that the price of commodities is going up. We look at oil prices being firmed up. We look at the opportunities for natural gas going down the road. We look at the opportunities for newer forms of energy like hydrogen. That could be good, but knowing that there will be people, even within the energy industry, who will not share in that. A lot of companies are right-sizing now as there are new ways of being able to do things. So, like Sandra said, it will be a K-shaped recovery, but I don't think that 6.5% is a sustainable growth rate at all.
Joe Oliver, what's your take on that number and the general state of the economic trends?
Look, well, first of all, I agree with the other two panels. I mean, this has hurt a segment of the population, and it's financially hasn't really hurt another part of them whose demand is straining to be expressed in the marketplace, and that's why we didn't need an economic stimulus. You don't have a stimulus when the economy is growing at 6.5%. You target your support to the people who need it. I mean, sure, the government has our backs. Soon they're going to have their hands in our pockets.
And we're back here at Boom and Bust at the News Forum talking to our monthly panel. We were just starting a conversation with Joe Oliver about the state of the economy and that 6.5% Q1 growth rate. Joe, please finish your thought.
Sure. Look, it's I agree with Gary. It's obviously not sustainable. We're going to be looking at growth rates over the intermediate term of maybe a bit more than 2%. And one of the critical issues is whether interest rates will go at a more rapid rate than economic growth. And if that happens, we're in serious trouble, and we're gonna hit the fiscal wall, but not immediately. That's for another day. Hopefully, I mean, one of the issues that we have to think about is, sure, there was a tremendous snapback, but on the other hand, we have very few people in this country fully vaccinated. It's only 3%. And if you want to hear a shocking number, we're tied for 80th in the world in terms of fully vaccinated people per capita. So we're in the middle, or maybe it's towards the end of a third wave here in Ontario, which is having a brutal effect. And there's nothing to preclude a fourth wave, unfortunately, if we don't get as many people as we can vaccinated. And fortunately, the vaccines are starting to come in now. So, will that make a difference? Yes, it will, but not immediately. So that's going to slow things down a bit. But the longer term trends are for much more modest growth because of demography. We're an aging population. Globalization is going to have an impact, and technology keeps inflation down, but hopefully growth up. So there is a lot of factors in play here, but we can't look forward to a spectacular growth over the next decade. And this particular number, I mean, it's you can get excited about it, but it's part of the snapback, and it's obviously not sustainable. So things will have to be done, and the amount of debt is also going to be a huge drag going forward for a long time.
Well, let's talk about, and Gary, I'd love to get your perspective to start off with. Maybe this is, I hope it isn't an Ontario-centered question, but there's a certain amount of frothiness in the Ontario economy when you look at real estate prices, so asset inflation, certainly the cost of lumber. Everybody's complaining about the cost of lumber these days. Everybody's complaining about the cost of groceries these days. Do you see that? Is that an Alberta problem as well, or is that not something that you're concerned about right now?
It's happening in Alberta, and particularly in British Columbia. British Columbia, I think, is probably a closer approximation for what's going on in Ontario, where there are people who are buying properties sight unseen and getting involved in bidding wars over properties. But my own personal experience is that there is frothiness in the market here in Calgary as well. And I just recently sold a house to move into a smaller place. Kids are growing up, and we don't really want them coming back. So we thought we'd go from 6,000 square feet to 3,000 square feet. And And the cost of lumber has driven up the cost of trying to build a new place. I remember in 2005, I was working on the softwood lumber agreement. There was a provision in it that said if the price of lumber gets to $300 per thousand board feet, there would be no tariffs put on because everybody was making loads of money on it. Well, I mean, the price is now well over $1,000 per thousand board feet. And on average, it's adding, $40, $50, $60,000 to the cost of a new construction. And so it's, whether it's new construction or existing inventory, it's happening in Alberta as well, not just in Toronto and in Vancouver.
Sandra Pupatello, we just have over 30 seconds. We might have to jump to the next segment, but can you comment on the frothiness of the economy from your perspective in Windsor and elsewhere?
People in my hometown in Windsor, we've never seen housing prices like they are today. I mean, they would rival the GTA, quite frankly, which is unbelievable. So any place that has great Wi-Fi seems to be a candidate for accelerated housing prices. But it also points to maybe something we can pick up later, the notion of the supply chain issues.
And we're back with the panel. My name is Tony Clement. This is Boom and Bust, and we're talking to the monthly panel. Sandra Pupatello, you were making before the break an important point about how supply chain is affecting the ability for people to pay for groceries and lumber and so on. Please continue that point.
Well, Tony, it's a shameless plug for an initiative that you and I have been working on called Reshoring Canada, where we're actually talking to multiple sectors, industry associations, and speaking to what are these problems that the pandemic's helped exacerbate, but some certainly was there before, where we actually are seeing these long-term issues now of getting certain products in and making us have to reconsider how do you modernize the supply chain and potentially bring some back to Canada, de-risk for companies, and who has authority to make some of that happen. Individual companies like the ones in my town in Essex County, they can't solve the whole global issue. So it really does take a collective to sit down and actually decide how are we going to fix some of these issues. It's shutting down plants all over the auto industry, for example, because we can't find these computer chips. And it really has identified risks that a year ago nobody was talking about. And now people are on layoff because we can't get some of these products. So I do think that there's an intelligentsia now that has to come together around these issues for the country.
Joe Oliver, your turn to chime in on this. We went from real estate prices and other inflationary issues, but we ended up talking about the supply chain. So whatever you want to talk about, please do so.
Well, sure. Just let me talk about inflation for a second, because this is probably one of the central debates that are going on now. The bulls, the people who think we're going to hit big inflation numbers are talking mainly about the tremendous and unprecedented fiscal and monetary stimulus, much more than at the last big recession, and also the imbalance of demand and supply. The demand is going to is there for those who haven't been hurt financially, and supply is somewhat constrained. So you're having tremendous pressure on commodity prices, on real estate prices, and of course on the price of stocks. On the other hand, the bears are saying, hey, long-term growth is going to be affected by demography, by globalization, by technology, by the fact that the unions, especially in the United States, are weaker. Foreign countries are going to take a longer time to get out of COVID because they don't have the vaccines and so on. So this is a debate which is going to go on for a while. But what I'm hearing in the marketplace among bond investors and stock investors is they're leaning more towards the inflationary side of things. And I'm not talking about hyperinflation at all, but they're talking about inflation, exceeding the band that the central banks are putting on it. They've been targeting 2%. Now the band is 1.3%, and there's some people, there's a real concern that it could go higher than that, and it has all sorts of implications for housing prices, for saving, for investment, for economic growth, and for who's going to be hurt and who's going to be helped. I mean, in terms of supply issues, one of the, rather than having a group of central planners get in and decide how to restructure the marketplace, and a bit of that has to be done. But let's try to make this country more competitive and more productive, and that will bring in industries and curtail the really devastating problem of capital outflow. Capital isn't staying, and capital isn't coming into the country in the way it should, and that has real implications for employment and economic growth.
That's all we have time for tonight. It was a great pleasure to have our monthly panel with us once again. The Honourable Joe Oliver, former federal Minister of Finance, Sandra Pupatello, former Ontario Minister, Gary Marr, former Alberta Minister. It's been great having you. We'll see you next month.
Thanks, Tony.
Bye.
Thank you, Tony.
Would like to thank the panel once again, talking about the state of the Canadian economy, the budget, of course, talking about some future trends. Is it too frothy, or is there inflation in the forecast? These are all important issues for you, I know, and we'll continue to cover them here at the News Forum. Thanks for watching.